microphone. Hi, everybody. Long time no see. So listen, guys, we have a record number of people on the webinar today. And to be honest, I can't blame you. Don is one of my favorite webinar presenters. Some of y'all might remember him talking about tax credits. He gave an unbelievable presentation just a few months ago, which you can currently check out in the archived webinar page. So, before we get started, he is a certified tax coach, is seasoned in tax reduction strategies, working with individuals, businesses, and charities around the U.S. for more than 29 years. Because you'll know I only work with experts, right? And you can't just be good, you got to be the best. He's also a sought-after speaker on tax and financial issues. A lot of you may have seen him at events, at association events in your area. If y'all haven't had him out, y'all really should, because he's wildly entertaining. His booth is fabulous. His employees are phenomenal. Nick's okay, but the rest of them are great. I'm just kidding. Nick's not here for me to pick on him today, but he'll be joining us in a little bit. But anyway, I'm going to hang him up and turn it over to Don. Thank you so much for doing this, and especially for the last minute to address these questions all of our providers have.
Thank you, Christy. I appreciate it. Listen, again, thanks for everyone being on. We are truly humbled by the response. Our goal really, and we're going to talk about today, is really to help as many DCs as possible. I appreciate Christy and Ray and everyone at ChiroHealth allowing us this opportunity to help educate DCs out there. I want to stress to you the things we talk about today, you can do 90% of the stuff on your own. If you want a discussion later about some of the other things we'll cover, you can do so, but we want to encourage you that you can get this done, but time is of essence. So we don't want to waste your time here. We want to get right into it. I would encourage you also, if you're watching today and your state has not reached out to us. We have many states, so I've already done 2 of these today. I have one other one this afternoon, California. We have a couple tomorrow and next week and such. Encourage your state to get this information out, because ChiroHealth has been very gracious on getting the information out to their network. But we know there's people who are not getting this information for whatever various reason, because they're not, unfortunately, part of ChiroHealth. That's number one. But number two, this is life and death for your business. And so that's why we want to get this information out. So a little bit about what we're going to cover today is, number one, SBA Disaster Relief, tax credits and rebates for chiropractors. Chiro Tax Pro, powered by Quartermaster. We've been working with chiropractors for many, many years. Quartermaster Tax Management ultimately is the engine that runs this, but because we're so specialized with chiropractors, that's why we go by Chiro Tax Pro here in 2020. So a little bit about us real quickly. We have a specialized team of CPAs and accountants, SBA Economic Disaster Assistance, and tax credits and rebates for chiropractors, which we'll talk further as we go along. We work with chiropractors from across the United States, so no matter where you are or where you're watching it from, we can assist you. If you want help, if you don't, we're going to give you direction today on how to do it yourself. We understand the unique tax and financial situations that chiropractors face each and every day. And then lastly, we love helping DCs become the hero. Listen, I've been talking to chiropractors for the last week who are questioning, do I keep staff? Do I pay bills? All these type of things. And so you take this very, very seriously, of making sure that your employees are still able to come to work, that you're able to serve the patients who are able to come in. But it's an economic situation. You're trying to make sure your employees are taken care of. You have your own family. So whether you're male or female, our goal is to make you the hero in this situation. All we're doing is we're going to talk about how we can come alongside you if you want us to. You're not under any obligation. This is not a sales presentation. This is information that you need to have so that you can get the most benefit possible. So we are results driven, though. I will tell you this here. In the last 2 years, we've been able to find $5 million in tax credits and tax savings for our DCs around the country. And of course, we are chiropractic driven and centered. Today, we're going to cover the disaster relief, the economic disaster relief, the Families First Coronavirus Response Act that was passed a week ago, and then tax rebates, which Nick will cover towards the end. He's wrapping up our Virginia Chiropractic Association call just a little bit ago. Good news, July 15th, 2020 personal taxes deadline has been moved from April 15th to July 15th. It also impacts, number one is your quarterly estimates. It also impacts if you have a tax bill for 2019. It's all been pushed off, no penalties, no interest, which is good news. New information is being updated daily, and so we'll keep you abreast of that as well. Disasters have come year after year. So the one thing we do know is that, for example, Tennessee, we had a call with them, or did our webinar with them this morning. They unfortunately, through Nashville, had a horrific tornado come through and do a tremendous amount of devastation. But the reality is, most of us sit on the sideline and let the world happen. If it doesn't impact us directly, that's just, we're human beings, that's our nature. But the reality is, the COVID-19 is impacting everyone, from the West Coast to the East Coast. We have California this afternoon at capacity. The reality is, it is impacting everybody at home. I was just sharing with Christy, we have one of our staff members who was tested last Saturday, who's on home assignment. I mean, they're quarantined based upon the laws. Fortunately, we can work through technology, and he's doing just fine. But the reality is, it's impacting even us, and I'm sure you probably in your office or maybe family members as well. So we're going to get into how can you get the most benefit from what our government's coming to do to help. Now, all 50 states and DC are currently covered. Now, every state has specific counties, in most cases, that are being approved. Not every county in the state is going to be approved. And we'll talk about where you can go to find out if you are. Again, it just varies from state to state. Some are the whole state, some are just specific counties. So SBA's Economic Injury Disaster Loan Basics. This is what we're talking about, the EIDL. The EIDL is different from their other ones. So the disaster in Tennessee, that would fall under the SBA disaster loan. Your SBA loan that you received when you purchased a practice or started a practice, that's different from this here. So there's different criteria and different qualifications for this. So what businesses are eligible to apply? In reality, if you're a chiropractor, you're going to fall in this category. If you've been impacted by the coronavirus and you're a small business owner, which we'll talk about that definition in just a second, then you're going to be eligible. These other two aren't so much applicable unless you're a provider to DCs. That may be applicable, and that is if you provide services directly to the businesses, like chiropractors. We have a group out here on the East Coast that provides supplies to DCs. That would be one of those situations. But you're directly affected, so you're going to be eligible if you meet the other criteria. Then lastly, I want to stress this to you. If you haven't heard about it, I would implore you to reach out to your senators and congressmen about the Immediate Relief for Rural Facilities and Providers Act. So it was a senator from the state of Tennessee who brought this to the committee. It's not gone very far yet. It was just put out there on the 23rd, but it says, it's called the Providing Stabilization Relief for All Providers, including chiropractors, with an emergency one-time grant to cover your payroll from January 1st to April 1st of this year. Huge. So whatever your payroll is for your employees, if you're on payroll, this is going to be covered. So it's imperative that we get this passed, because life and death for these businesses out there, for UDCs, it's in the balance here. And then, of course, it's also going to provide a unique opportunity for our chiropractors that other business owners won't be eligible, as far as we know. And that is, instead of the interest rate we'll talk about here in a second for the SBA loan, it's going to drop it down to 0.25%, almost for nothing. And it doesn't start till after 2 years once the pandemic has ended. So we're looking out in at least 2022 and sometime in 2022 before the interest starts even accruing. Very, very important. Again, contact your senators, your congressmen, tell them to pass it, okay? All right, so let's talk about the injury disaster loan basics. Number one, what's the criteria for loan approval? Number one, credit history. They do look at that. You got to be a 640 plus or greater. It's the first criteria. Secondly, repayment. So as we'll talk about documentation in just a little bit, there's a lot of documentation, tax returns, P&Ls, fixed asset lists, all these type of things that we have to provide, personal financial statements. They're going to look and see your ability to pay it back. So let's say, for example, you're a DC, you've been running losses for the last couple of years, or maybe you're not making anything in your practice. You're probably not going to be eligible, just because they want to see the ability for you to pay it back. If you're not making money before the crisis, you're probably not going to make money during the crisis or maybe after the crisis. So that's one thing to look at. And you have to be in a declared county, as I mentioned before. I'm going to give you an example. So I have California here in just a little bit. California is a big state, 40 million people that have been got the stay-at-home requirement. But I'll just show you theirs. Not all the counties of California are on that list. So it's important that you understand, and I'll show you the website here in a second, of where you go to find out if you are part of this list. If you're not, then you will not be eligible. But they're going to change this. This is all based upon confirmed cases in a particular county. That's going to be the factor on whether or not you're eligible for this program. Okay. The term. So how much can you borrow? Up to $2 million. It is all based upon need. So again, if the need is $50,000, you're not going to be approved for $2 million. So it is number one there. Number two is the interest rate is 3.75. This is what I was saying earlier. If we can get that bill passed that we were referring to earlier, it's going to get down to 0.25, which is cheap money, and it gets everything back to order, and it doesn't cost you an arm and a leg to have. And 3.75 is not that high anyways, but the reality is it's going to give you a bigger break. Eligibility for these working capital loans are based on the size of your business, and so that's going to be a factor on, and of course your financial resources are going to determine how much you're going to be eligible for. Now, how can you use a fund? So in the last webinar, someone asked, can I use that to pay my school loans? No, you cannot, but there are some things that have come down here recently. If it's a federally insured student loan, as a little side note, that there's a deferral on payments and interest if it's federally insured. So again, I'm not going to be the person to answer that question. You'll want to contact whoever's servicing your loan. These working capitals can be used for paying fixed debts, payroll, accounts payable, other bills that could have been paid if it hadn't been for this disaster. So that's a working capital loan that they're providing for you. So loans are not intended to replace lost sales, profits, or expansion. So if you're a DC who's expanding, that's not what this is for. If it's not here to replace sales or profits. It's to keep your business open and to keep your employees employed. That's ultimately what it all comes down to. Okay. Other terms, again, the term SBA Economic Injury Disaster Loan, or EIDL, is again specific to this particular program. $2 million, I mentioned before. Terms 30 years. Most of the DCs are going to be 7 or 15 because they want to get it paid off as quickly as possible. Again, if it's at 0.25%, you might be able to extend out a little bit longer. Again, without that 0.25, it is going to be 3.75. Typically, monthly is the payment schedule. They're looking at deferrals, of course. They can be up to as much as a year. Right now, it's set at 4 months, but we're expecting that to defer. It does accrue interest if we don't have that bill that's passed, though. The bill allows deferral for 2 years with no accrual. This particular program, I mean, the one that is out there available right now, does accrue interest, even though you might have a deferral. Okay. There is no charging of points or closing or service fees for the SBA loan. So maybe you'll do one through the bank to buy the practice or to start a practice. That's a whole different situation. This is for economic disaster. A loan approval time, summarized about 30 days. Key is getting in the queue. On our last webinar, the site's down. The reality is, and I'm going to reiterate this here, the U.S. government, as much as they're trying to help, they don't do well on websites. And so it's been crashing. Matter of fact, the note that one of the DC said is generally crashing at by 7:50 in the morning. So we've actually got a process we'll talk about a little bit later that our goal is to get things done in the overnight hours. When people are asleep, we're going to be working. So that's all that. Your first payment check is up to $25,000, and it's going to happen 5 days after you're approved. So once you're approved, they're going to stroke you a check for up to $25,000. And of course, the SBA case officer will be handling that. Anything above 25, so 25,000 below is unsecured. 25,000 above is collateral. So collateral, you won't be denied if you don't have the collateral. But the first thing we're going to look at is if you own the building, They're going to look at you on your home, rental property. If they're not available, they're going to look at equipment, something to assure them that this loan is going to be paid back. Of course, economic disaster loans are available for nonprofit, small business owners, agricultural cooperatives. But what the criteria is, and in all DCs that I generally work with, that our team works with, is $8 million in annual revenue and fewer than 100 employees. I would say the bulk of you DCs that are on this webinar today would fall in that category. There are going to be exceptions to that, and we can certainly have a conversation. We actually have a DC out in Oregon that blows this out of the water, but that's not the norm. That's the typical is under $8 million. The IDL terms are, of course, $25,000 or more. It's going to require collateral. SBA takes real estate as collateral. That's a preferred asset. And of course, they will not decline the loan because of lack of collateral. But just know this here that they're going to ask for some kind of assurance to get paid back. What are the criteria involved? The applicant business must have a physical presence. So this is extremely important. So the county, when you go there to look, and your county where your home is at is on there. So for example, I live in Cabarrus County. And let's assume we weren't on the list, but Mecklenburg, which is Charlotte, is, and my business is in Mecklenburg County, I would be eligible. But because I live in Cabarrus, but if it was switched and I lived in Mecklenburg, it wasn't a disaster, but Cabarrus was, then I wouldn't be able to qualify. It's not where you live; it's where your actual physical practice is at. And so, just kind of reiterate this here: you have to have a presence. You just can't have a PO box there. You have to have a physical address. So, if your chiropractic practice is again in the county that's in the disaster area, then you'll be eligible to apply. If not, you will not, unless they add it to it later. They are different from other SBA loans. This is coming from the U.S. Treasury. This is not coming through a bank per se. It's coming from the U.S. Treasury. So that's the difference and the distinction between the different ones. You do not go through a bank. I had, I believe it was Tennessee. Someone said, listen, my Chamber of Commerce has sent out an email saying, listen, you can get low interest loan, SBA loans to the banks. Well, that's not the same thing. You certainly can go and apply for that, but this is for the economic disaster that we're seeing. You go to disasterloan.sba.gov to apply. I'm going to talk further about this in just a couple minutes, but that's where you're going to go. We have, I think, Christy, you said 1,500 people that registered for today. There is no possible way that we can help 1,500 people on the call today. We want to empower you on how you can do it yourself. We're available. We'll talk about that second to help those who want it. But the reality is we prefer that you do it if you have I call it the intestinal fortitude to get it done. And so key is, we'll educate you here. There's no obligation to take the loan if it's offered. So in other words, I would tell all my DCs, apply, get approved. It's better to have it available and not need it than not have it and need it. So it does not hurt. It doesn't cost you anything to apply. It's better, like I said, to get through this process because it's 30 days minimum. And so that'd be the soonest you'll be able to see money, and we'll have a sense. And my expectation, my belief, my hope is that this has come to an end, within the next 2 to 4 weeks, and things will get back to normal. So all those are factors that really will determine all this. But again, I'm looking out the window. I can see restaurants and businesses that are going to be calling for those same $350 billion that they passed last night, that the Senate did. So I will tell you, first come, first serve, and the sooner you get in, the sooner you get approved, the sooner you get money. Okay? Maximum unsecured, as I mentioned earlier, is $25,000. Applicants can have an existing SBA loan and still qualify for the economic disaster loan. Okay? They cannot be consolidated. So just keep that in mind. If you already have any type of SBA loans, they will not be consolidated. This falls under different criteria, qualification, the whole 9 yards. All right, so excuse me 1 second here. All right. You had tons of questions on the last one. So submit your application as soon as possible. I want to reiterate, as soon as possible. Don't wait this weekend. If at all possible, get it done. Recheck the filing requirements to ensure that all needed information is submitted. Because you want to know why? The number one reason, or the biggest reason for delays, is processing is due to missing information. Stressing, get it, and we'll talk about the list of things, and it's on the website. Get it together, get it submitted, okay? If more funds are needed, you can request in writing that you want to increase, but also, as my illustration earlier, let's say you get approved for $50,000 and you have it there. You don't have to take it if you don't want to, but let's say, for example, you do need to take some of it, maybe half of it, and you don't need the other half. Then, of course, you can request a reduction in the loan as well. But again, having it and not needing it is much better than needing it and not having it. All right. And then if loan request is denied, which the reality is I don't see, unless you just don't meet the criteria, very few people I think are going to fall on that category because they're trying to pre-screen it so that you don't even go there unless, again, the credit score and the designated disaster areas. All those are factors that will come into play. But the reality is if you do get denied, you have 6 months to get a written request for reconsideration. Okay? So it's not all hopeless. If that does happen, just know that there is a process. You need to make sure it's flawless. Right now, again, until they pass it, the House and President Trump signs off on it, we have $8 billion. $8 billion doesn't go very far considering the national crisis. The $350 billion is a lot of money, but it's, again, when you consider all the businesses, the small business owners have been impacted by this, the professionals like yourself, that is not as much money as we really think it is. We expect, with all sincerity, so our contacts in Washington are that they will have something come out again in the fall, but they want to get it in the system as quickly as possible, get things moving forward again, and not stall out. So your first option is, and again, I want to stress this here, I would expect the bulk of people, we're going to go this route here, and we're going to tell you how to do it. You can go to frequently asked questions, go to disasterloan.sba.gov/ELA, make sure it says ELA/home/questions, because these are frequently asked questions. Then, of course, the application you can see there has a specific URL for the ELA. The ELA is that economic disaster assistance, okay? So make sure you go there, and we'll reiterate this website numerous times in the next couple of slides. Basic filing requirements are, number one, you got to complete the 5 or the 5C, which is the application itself. Then you have a lot of other documentation that goes along with it. The 4506, which is a tax transcript. You also have to have all your copies since 16, 17, 18, and 19 for your of your tax return, personal and corporate, if you have a corporation, S corp. Your 2202 is your schedule of liabilities. The 1413 is personal financial statements, other information. So next page. This is actually the website when it's up and working. Complete copy and all schedules of all your tax returns, information on the principals, the general partners, managing member, affiliates, all this type of stuff has to be completed. Most recently, like I said, federal tax return. If you have not filed your 2019, what the likelihood is most have not, a lot of file extension. Then, of course, in that case, there will need, or you will need to file a P&L, a year-to-date P&L for 2019, and a balance sheet. Okay, and then also you'll need a current year-to-date. So those are documentation that you're going to need to be able to submit your application and to get it moving forward. Lastly, is additional filing requirements under Form 1368 is monthly sales figures. So you're going to have to look back the last 3 years, a month-to-month sales and cost of goods report, and submit that to them as well. Okay. How to apply? Again, going to the website disasterloan.sba.gov/ELA. You want to make sure you put that ELA behind there to make sure you're in the right application queue. And then, of course, I want to encourage you to do a paper filing of this as well. And you go to /disaster and get that. And why do I encourage you to do that? Well, and Nick, I don't know if you're on here yet, but I know that someone had posted that the site keeps on crashing, which we expect to happen. I would rather you have a hard copy and you can FedEx it over here to the SBA than not to be able to get on and get plugged in. Okay. So this is the website. When you go there, you can look here, eligible disaster areas. So if you weren't on the list, you can click there and see if it's been updated, applying online, and then of course checking status once you do apply. All right. Second option is, and I know I sound like a broken record, we encourage you to do it on your own if you want to and you can. Second option is you can utilize Quartermaster. We have a full team of CPAs and accountants that are on and staffing. We double our staff to accommodate. We have the experience to maximize the loan potential, check for mistakes and missing forms, guarantee approval or your money back. So we'll talk about that second. We guarantee our results. If we can't get you approved, we're going to give it back to you, because we're not here to go through all this process and not get you approved. So I just want to let you know that is available. Free tax credit and rebate analysis. We'll do we'll talk about here in a second about the family leave tax credits and things such as that. We'll do that analysis for you. Nick's going to talk about the tax rebate analysis for you as well. If you want our help, go to getcovidaid.com and we'll be more than happy to help you. We, again, want you to do it on your own if you choose to do so, but if you need help, we're here to help. What we're going to do if you do decide to engage us is do the sales figures as necessary, the P&Ls, the financial statements, listing all the fixed debts, of course, completion of all loan documents, and we're going to be your go-to, or we'll be the go-to person for the SBA for questions. Our goal is to keep you disengaged only as necessary, because we know you're still busy. If you're running your practice, still seeing patients, we want to make sure that that's the case. Okay. This is our internal form. Just to let you know, we have a very step-by-step process to make sure nothing is missed. Okay. The task force that I sit on with other CPAs and accountants around the country, as of March the 23rd, we had 169 applications submitted. So again, to reiterate, if you choose to utilize us, these are all the things that we're going to do. The Families First tax credit analysis, the tax rebate analysis, all that's going to be included. The SBA recommends a fee of $2,500. Because you're on Chiro Health and on this webinar, we're going to knock off a quarter of that. And there's a lot of work. I mean, I've walked through all the documents. There's a tremendous amount of work. So if you want help, we'll be more than happy to do so. But the reality is, if you can do it, get it done quickly, and do it right. If you go to our website, this is going to be what it looks like. So number one, you're going to be able to choose. Do you want us to do everything? Do the free analysis for the employee on leave, the tax rebate, and the loan? Or do you want to pick and choose which one you want? That's totally at your discretion. Then, of course, you're going to come here. It's going to have your first and last name, your mobile number. The reason why we ask for mobile numbers is because of contact. So if there's a question from the SBA we don't have the answer for, we want to be able to reach you. We also want to notify you on the status. All these are factors that come into play. Of course, your email address as well, because we'll use that in the process of communicating. If you want, again, you have to mark here, we can contact you concerning your application. And then, of course, this is where it will take you. Again, complete this as thoroughly as possible if you want our help, because the sooner we can get this information in, get in your application, get it submitted, the sooner you get the money. But if you have any fields you don't understand, leave them blank, because you're going to have a conversation with one of our team members to answer the questions, fill out the form, that the information you didn't put in there. But do us a favor, because we are expecting a lot of folks needing help. We want to make sure that if we can get thorough information, we can get it done, get it quicker, give it over to our team, our case managers, and get it submitted. But we'll review over it, make sure that nothing's missing. Once that happens, we're going to request documentation for you. So we actually have a very secure site. It's PCI, HIPAA, DSS compliant, and it's 256-bit encrypted. We do this for your safety and security of all your information. And so you'll have a link here. You'll be able to go in here and put in your personal and corporate tax returns if you have a corporate for every year, and any other documentation. So it's a secure way for you to get the information to us that we're going to need to be able to file. And of course, we'll take that same information, upload it to the SBA, or print it out and FedEx it out to the SBA. Okay. All right, Christy, I'll be more than happy to take just a pause here for a second to see if there's any questions that anyone wants to put out there before I get into the tax credits.
Oh, there are a ton of questions.
I'll take a drink real quick.
If your family works in the office and we only take a weekly owner's draw, no payroll per se, would we still qualify?
Yeah, so I'm going to talk a little bit about, you'll still be as a business-wise, but when we talk about the tax credits, there's some specific guidelines if you're quote-unquote self-employed or a Schedule C chiropractor. Those are factors. Now, if you're just taking a draw and you have employees in there, that's still counted as income on your tax return. But the tax credits we're going to talk about is there's a distinction between that. So the loans is one, topic. This one here is a whole separate topic, which is the tax credit. So yes, on the loan, it's not going to prevent you. Just make sure you have your documentation in place. On the tax credits, it's going to be a little bit more specific. Good question.
Is the credit score for business credit score or personal? And Donna accidentally just turned off your audio, so you're going to have to click it back on. Don, we can't hear you.
Don, go down there and click on your head and then cut your microphone on.
There we go. Turn on audio.
Yeah, we can hear you now. I'm so sorry. I clicked the wrong button.
You see my full screen now? You see my full screen?
Yes, we can see your full screen. And your audio went down really low all of a sudden.
How about that? Is that any better?
Nope.
Huh.
There it is.
There it is.
Maybe our internet, who knows? So to answer the question, so it is your personal credit score. It is not your business score. So it's 640 plus personal, because ultimately that's what they're going to look at to determine your credit worthiness.
If you apply now and get 3.75 and then bill passes, does the interest rate drop, or are you stuck at the 3.75% interest rate?
That's a question we get often. The answer is it's based upon your SIC code, which is if you're a doctor of chiropractic, that's going to make you eligible for the 0.25. So what's going to happen is it's being processed. That SIC code is what's going to determine your interest. So, for example, the restaurant across the street is not going to be eligible for that. They're going to get the 3.75. So the answer is, because of your SIC code, that's what's going to put you back over to the 0.25% that passes. Any more questions?
Oh, sorry. I thought I turned my audio on. So if I'm a brand new business, licensed in November, opened in February of this year, and operating at a loss, does that mean I won't qualify?
It's going to be a little bit more challenging, because they're looking at some way you're going to pay it back. So you don't have any track record to show that. That's going to be a challenge. Now, the tax credit that I'm going to talk about here in a second has no bearing upon that at all. This is totally beneficial for you, as well as if that other bill passes that I talked about earlier. That's going to be based upon your wages, your employees, that are on your team now. But unfortunately, I have to tell you that they're looking at history to determine ability to qualify.
Let's see. Will accounts receivable work as collateral?
Yes, it will. Thank you very much for asking it. And AR, they're going to ask you that in the documentation. AR is one of the questions that they can use. I mean, a question they're going to ask you, but one of the assets they can use.
What about doctors who may have relocated and were supposed to open a few months ago but can't now, and everyone's doing nothing? Basically, everything that they were doing to open now has completely stopped with the shutdown.
Okay, so I want to repeat that back. So moved to a new location and really just haven't got out of the blocks yet. Is that my understanding?
Yeah, so basically he relocated, is opening a new practice, can't even open the practice. Everything, construction and everything has stopped. Would he not be eligible for a loan?
Yeah, so you don't have, so there's no capital need yet because you're not even open yet. Now, whether or not they'll, based upon your former practice in your former location, that may have some bearing. It's probably going to be iffy just because they're looking at what kind of damage have you experienced here in this first quarter because of the coronavirus. So highly unlikely for this particular one, not to say the other SBA loans won't be eligible, but this one here will be, I think, of a challenge.
Okay. If you're not approved for the loan, will it affect your credit?
Great question. No, it will not, because based on what we've been told, it will not, because it's not a typical loan. This is an economic issue. And so the SBA is looking at it a little bit differently. So it's not your credit worthiness per se, unless you're under a 640, that prevent you to do it. It's all about the economic need that comes into play.
Oh, this is a fantastic question. If we are still working, but volume has been reduced, so income has reduced, are we eligible to apply, or do we have to be shut down completely?
Oh no, great question. Absolutely great question. You do not have to be shut down. You can still be operational. You'll be able. They're going to be able to see, and that's where that going back to 3 years, month by month sales and cost of goods. That's what they're trying to determine. Okay, what have you been doing up to this point? And that's going to determine. Oh yeah, they've been impacted by this coronavirus, and they need help to shore things up. So yeah, you don't have to be totally shut down to be eligible for this.
Oh, there's so many questions coming through. Are there any grants available or just loans?
Yeah, so I will tell you, I was listening to Senator Lindsey Graham said last night. What they're proposing is an $80,000. Now this is exciting if it gets passed. An $80,000 loan, forgivable, $80,000 per employee for wages for the first quarter, which is huge. So if they're going to give that and they're going to forgive the loan, that's ultimately a grant. That's the only other grant besides the one I mentioned to you earlier, which is being proposed out there for chiropractors, which is the first quarter's payroll as well. So again, those are things that are still kind of up in the air. Once they get it passed by the House, because they're going to make some adjustments, I'm sure, and then of course President Trump signs it, we'll have the actual guidelines for the small business owners, and we'll have more information. Our goal, and Chris, I'll just tell you this, we'll get that information out to you so you can get it out to all the folks who have watched this webinar. Okay.
Great. Let's see. Several of y'all have asked if a link to the recording, or if we're recording, and will you get a link? The answer is yes. Everyone will get a link to the recording immediately after we're done. If I was in the middle of buying a home, would this impact my ability to get this separate loan?
No.
No.
Again, let me say, I'm not a loan officer. I would imagine they're going to base the loan on the home based upon your credit worthiness and your ability to pay in the past. The banks are not ignorant that everyone's being impacted by the coronavirus. So I'm sure they want to put out loans. The interest rates have dropped down low again. They're going to want to put you in that loan. Knowing that you're getting assistance under the EIDL is not going to impact it negatively. I can guarantee you every business owner out there, small business owner who's in that same predicament is going to have to rely upon some help to shore up their finances in their business. But again, I'm not the deciding factor on that. That's going to be a question for your loan officer at your bank.
Okay. Well, several people are commenting that this information is great, but they want to make sure they don't run out of time before the tax credit info.
Yeah. So yeah, and I have to get off this one and get on to one in just a few minutes in California. So, and Nick's going to finish things up. I'm going to cover the tax credit. Let me get through this here. And again, we can answer more questions, and Nick will talk about that a little bit. So the Families First Coronavirus Response Act, which was passed a week ago, has 3 tax credit provisions aimed at helping business owners. Now, this all revolves around a few things. Number one is the emergency paid sick leave tax credit, the emergency family and medical leave tax credit, and the health insurance tax credit. Those are the 3 that I'm going to cover here real briefly. Emergency paid sick leave. If you are diagnosed and you're quarantined with COVID-19 symptoms, or you're caring for someone who is quarantined by a medical professional for symptoms, you're going to be eligible for the emergency sick leave portion of the act. Now, what is that? $511 per day, up to $511 per day, up to 10 days. So let's say, for example, you become down with the COVID-19, maybe one of your dependents comes down with COVID-19, and you have the diagnosis, then you'll be eligible for this up to $511 per day for 10 days. So if your average income, and again, there's a calculation we'll talk about here in a second, is $250 or $300 or $400, it's up to that $511. Okay. If you are caring for someone that has it, it's lesser of $200 a day. So it's only for the $511 is for you personally. If you're caring for someone, it's $200 a day, up to $2,000. And it is capped out at 7.65% of your quarterly wages. So, and I'll show you the calculation in just a second, but they're using the FICA tax, the Social Security Medicare tax, as the offset here. So you're getting a credit from that standpoint to make up for it. Now, if you have, our schools here and everywhere else in the country are shut down, and you're having to care for someone in your home that's under age 18, they don't have to have the coronavirus, but you're having to be home to care for them, then this is what applies here. Or if you're unable to work due to declared health emergency, they just here in Charlotte, Mecklenburg County, they just designated as a stay-at-home yesterday. Now, there are essential responsibilities, but if the employees or yourself have to be home because, like in California, they're real strict, maybe Kentucky, who says it's not essential, whatever it may be, then this would apply to you as well. And that is a credit, is the lesser, of course, up to $200 per day, up to $10,000 per employee. So we don't know how long that could be, where you have to be home with the children, or if it's a local area where they shut things down, but you're going to get $200 per day, up to $10,000 per employee. There is a calculation, though, as you can see here. So I have example, Ava, Ted, and Mary. Ava makes $200 a day, Ted $150, Mary $350. Maximum $200, $150, $200, and of course a day sick. This is the preliminary credit. So $600 for Ava, $750 for Ted, Mary $2,000. Now again, this is to you. This is not to the employee. This is to you, because you have them on pay. You're paying them, and so this is ultimately to help cover that cost. But they do look at your quarterly payroll to determine what the maximum is. So in this case, it was $45,000. 7.65% of that is $34.81. So this preliminary credit will never exceed the maximum credit. So that's your cap. Health insurance, if you provide health insurance for your employees, this is an employer tax credit. This does not go to the employees. This is for you as the employer. So the portion of health insurance premiums that you pay is where the credit comes into play. So if they fall under the emergency paid sick leave or emergency family and medical leave, then you're eligible to take the tax credit, the health insurance tax credit. And it works just like this here. Again, it cannot exceed 7.65%. Again, Ava, Ted, and Mary, same scenario with their income. They all are eligible for either the emergency paid sick leave or emergency family and leave. But then you come over here to where it says health insurance. You're paying $500 a month for that. You add those two up. This is the credit. $48.50 would be the preliminary credit, but again, it is capped out at 7.65. So you get the lesser of the two. So this is a credit back to you. Ultimately, it will reflect on your 941s when it comes to calculating all that. Okay. Real quickly, self-employed sick leave and how that applies to you. So if you're a DC and you are a Schedule C, you take your income, your net income, you divide it by 260 days, working days, and that's going to determine the amount. And then, of course, you're capped out at $200 under the scenario of caring for someone at home. The 511 would apply to you if you are diagnosed with the coronavirus. Okay. Talk about S corporations. It all is based upon, unless you're a Schedule C, S corporation is based upon your W-2 wages, not your K-1, your profit. It's all about your reasonable compensation. So, an example, let's say your reasonable compensation is $100,000 divided by the 260. That's $384. So if you're not being diagnosed with the COVID, it's $200 maximum. If you've been diagnosed, it's $511. Okay. What to watch out for to kind of close things down on the credits is it's 7.65% is where it maxes out at. The first quarter of 2020, like I said earlier, the 941s are probably not going to be completed in time to address that, but it will apply there. Employers that qualify for both sick paid leave and FMLA credit. So let's say, for example, you come down with the coronavirus yourself, and then you have to care for someone, children as an example. You can take advantage of both, but you can't double dip in the same day. So it's either or. You're only going to use one per day. And if you work a half a day and then go home and to take advantage of this here, or one of your employees does, it is going to count as one full day. All right. Self-employed must not be able to work the day of sick leave or FMLA. So in other words, you can't, if you're Schedule C, consider self-employed, you cannot be eligible for this if you don't qualify for it. In other words, if you don't meet those criteria. Okay. Now, I'm going to turn this over to Nick for credits and rebates. Nick, it is 2:45 here on the east side. I'm going to have to split out, but if there's any immediate question, I can certainly answer, but then I'm going to have to bug out of here in the next couple minutes to get over to the California conference webinar. And so, Christy, anything pressing that you'd like me to answer before I turn it, or you turn it over to Nick?
Nope.
Awesome. Thanks again, Christy. Thanks, everyone at Chiro Health, Ray, everybody. Again, our goal is to help you. If you can do it yourself, do it. If you want our help, we're here. And Nick will talk further about that as he finishes up. But again, thanks very much for taking out of your busy schedule. We are praying that this comes to an end quickly and that y'all can get back to business as usual. Again, have a good day. Bye-bye.
And guys, just to let everyone know, we're going to take all the questions from here and make sure that those are in the FAQ that we're going to get out to you as well. All right, Christy, do I need to share my screen, or will you pop up the rest of the?
You need to share your screen because we have, I didn't have the updated slides today.
Okay. And let me know when everybody can see what I'm seeing.
We can see it.
All right, so this is something different. This is something that we've been doing for a while, but it's very timely now because doctors need an influx of cash fairly quickly. And this is something the majority of DCs that we work with don't take advantage of. This is tax credits and rebates. This is specifically for research and development credits that most DCs don't utilize. And I'm going to go through and talk to you about how you qualify for this. We are going to do a free tax credit study for you and let you know if you qualify. And if you do, we will talk to you about how you can engage with us from there. I'll go through and show you a few case studies of these as well. So a tax credit is something in Section 41 of the tax law that has to do with tax credits for R&D for medical professionals. And basically for anything that you do that is innovative, creative, experimental, trial and error for your individual practice, you qualify. Most people think that when it comes to research and development, credits especially, that you need to be doing something innovative or creative for all of your medical field. That's not the way the congressionally mandated tax law is here. It's just got to be new for you. So to give an example, if you go to a CE course and learn to adjust extremities different, that's a qualifying activity. There is a percentage of tax credit there for you. And we will go in and help you identify all those things that you qualify for and tell you how much credit is there. And that's proactive. Now, if you haven't taken advantage of these in 2016, 17, and 18, we can go back and get those for you. And that comes back to you in the form of a check from the IRS. We actually amend your tax returns, get that money that you're owed from the IRS back, and get it to you in your hand as a lump sum that you do not have to count towards your income. That's just money for you in your hand if you haven't taken advantage of these. That's what's called a rebate. And these are legally right for you guys to use. They're congressionally mandated, everything from green energy, employee hiring, R&D, and many more. And I'll tell you, the average doctor with us gets back about $40,000 in credits. We see as low as $14,000 or $15,000. We've seen as high as well over $100,000 in rebates going back to doctors who take the time to do this. So a tax rebate is a payment to the taxpayer when the taxpayer pays more than they owe. So when we amend, that means you've paid more than you owe. If you're on this webinar and you paid taxes in the last 3 years, chances are all of us did, and you didn't utilize your available tax credit for any one of those years, the government may owe you money, and they probably do. Your taxes can be amended up to 3 years of rebates, can be reclaimed in the form of a check. And since our personal filing deadline has been pushed back to July 15th for the COVID emergency, we now have until that date to go back and get your 2016 credits. Again, we've seen as low as 14,000, as high as six figures. So what activities qualify? You may be thinking to yourself, oh, I'm not going to qualify for these. I don't do anything research and development or credit worthy. So I'm just going to give you some examples of the most common ones that we help doctors get money back on. So one of the first one here is changes to technique due to CE. So if you go to a CE course and you, like I said, learn to adjust the way you do a technique, then that is a development activity for you. You went to a research event, you developed the way you did your practice, you developed the way you work with patients. That's a qualifying activity. If you've added LED lighting or green energy windows at any point in your length as a chiropractor to your building, if you own it, then that is credit for you as well. Hiring new employees, training existing employees, there's a lot of credit for that. If you've made improvements to your website or maintained a blog or social media platform, there's credit. If you've made disabled access friendly improvements to your location, so handrails in your bathroom, or if you've done anything like widening of your doors or put a ramp outside, there's a big credit for that. Paying for or providing childcare needs for your staff. And then this underlined one here is the big one. This is the most common one that we get for DCs. Designing, developing, or improving a technique that helps your patients. And this is research and development credits a la carte. It's called practice for a reason. If you're improving the techniques that you use with the doctors or patients that you see as a doctor, you're going to qualify for this. If you sell products on your website, if you create custom care plans. So as a DC, if you're not just cookie cutter, if you diagnose and then create a custom care plan for each patient, all the time that you spend doing that qualifies as development because you're developing the care plans. Changing to your business models, such as changes to the way you intake patients. Experimenting with new products or equipment to determine if they work for your practice. If you've brought in CBD, if you're trying out a new cream or a new decompression table, that experimentation time, utilizing those will count. A new laser even, and many, many more. So as we go through those, you can see that the majority of doctors we work with are owed money and they qualify for this. I'll go through the few IRS qualifications here, and then I'll go through a few detailed pieces of information with you. The R&D study qualifications for this part of it, these are directly from the IRS. Does your practice develop or improve a process or technique to assist patients? Almost everyone is yes. You're improving or developing upon a technique that you use to help your patients. Does your practice rely on a physical science? Typically that answer is yes. As a result of the activity in your practice, is there a new or improved performance, reliability, a process or technique? And do you spend at least 30% of your time with patients? Almost all DCs answer yes to all these. If you are a owner doctor and you don't actually see patients, but you pay associates to, do they spend at least 30% of the time with their patients? And if that answer is yes, then you still qualify. Some other qualifications, for this to make sense, you need to have paid at least $30,000 in federal taxes. The big thing about this and the reason for this is, let's say that you do a lot of research and development activities and we qualify you for $50,000 in credit. If you only paid $10,000 or $15,000 in credit, after we look at your qualifying activities, you couldn't get back $50,000 in credit. It would be the amount of time that you actually applied towards what you paid in your taxes. So the line for us is $30,000 in federal taxes. And then, do you have employees? The more employees you have, typically the higher your credit goes. So that's one of our questions there. If you're an S Corp, you count yourself as an employee as well because you pay yourself a W-2. There's some other noteworthy stuff down there. If you're doing any research projects or you're teaching any CE or developing any CE, you definitely need to get on my calendar because there's a lot there for you. So how does it work? The website that Don showed you earlier, getcovidaid.com. If you're taking advantage of other stuff, make sure you have checks in that if you want help with that. If you want help with this, the tax credit study to see if your owed money is free. Right now, we're not charging for that. We're going to do that piece of this 100% free for you. You can select the tax rebate box on getcovidaid.com. and that will put you in the queue to get help here. We're doing the loans first, and then we'll go back and do these, but you can still get on our calendar. Securely submit 3 years of your tax returns. That's with anything that we're doing. If you're in California, you will submit 4 years because California actually allows you to go back to 2015 for state filing credits. They are paying you to continue to do business in California and not go to some other state to do your business. After that, a qualified decision will be made. That typically takes about 3 or 4 weeks. We'll do your full study. We'll have our tax attorney look at it and go through it. And we'll tell you how much money is there for you, how much are you owed, and then you can make an educated decision if you'd like to use us to do your amendments and finish the other 2 or 3 years. And once all of that is submitted and amended and done, it typically takes about 12 weeks for the IRS to cut you your checks. Believe it or not, if the IRS owes you money, they're not the fastest group in the world to get that out. But you'll know how much is coming to you, and it'll be on the way. A couple case studies just to show you guys how this works. This is Dr. Matt. He lives in Virginia. He had actually retired when he reached out to us. He sold his practice in 2019. We completed a credit study for him for 16, 17, and 18. And he got back almost $15,000 in tax credits, which he was retired not expecting any money. To find out he was owed and then receive $15,000 was huge for him. And qualifying activities for him where he added taping to his practice. He added rock tape, which was something new for him. It's not new to the industry, but it was new for him, so it counted. He refined his technique to reduce the number of patient visits needed, and he experimented with some new products in his practice, some new creams and ointments and that kind of thing. And those activities qualified him for enough credit that he got back $15,000. This is a case study for one of our doctors in Georgia who did this with us. He has 10 employees. He completed the study for 16, 17, and 18. He met the basic requirements for R&D. He did a lot of employee training. He got back $100,000 in tax credits after interest. 98,838, not including interest. It was about $101,000 after interest. Some of his employees were associates, so that added to some big R&D time for him. And that was huge for him. And remember, that's $100,000 that he does not have to pay taxes on. That was paid back to him from overpaying. And this last one is Virginia, D.C. He had 18 employees. The majority of his employees were CAs and office managers and personnel. He had a social media person on his team as well. We did 16, 17, and 18 for him. He did meet the basic requirements. He had a big activity where he created new training and operations manuals for all of his employees, and that time he spent on that qualified him, in addition to meeting basic requirements for R&D. And then he provided online training for his staff and new content to his blog. He got $55,000 back. So those are some examples of what we see. This is very common for those people who qualify. They're getting that back. And some of the questions I get here, the biggest one I get is this safe? I can tell you, as a business group, we've done over 5,000 of these, over 300 chiropractors. We're actually coming up on over 400 now, and we've never had an audit. As a fiduciary, I can never tell you that there's no risk in anything. Just sending in your taxes, period, through TurboTax, there's some risk. But we do everything we can to make sure that there is no audits, and we've done that very, very well, as you can see. We stay within the bounds. We keep everything legal and ethical, and we ensure that you are well taken care of. The case studies are completed and reviewed by our CPAs and tax attorneys before we ever get on the phone with you and tell you how much is there. So the number we're giving you is real. It is looked over already by legal professionals to know that you actually do qualify for that. And one big reminder here is that these are congressionally mandated. These have been here for years. They were expanded upon in the Bush administration, and then actually in the Obama administration, they're made permanent. So they're not going anywhere. They're there for you to use. Frequently asked questions. Why doesn't my CPA tell me about this? The big reason for that is this isn't something that most CPAs do. It's not in their field of study. They're about helping you in compliance and telling you how much you owe. If you have a really good CPA, they may help you talk about some tax reduction strategies, but most of them don't know how to complete a tax credit study. They don't know how to ask about the different modalities you use, or how much time do you spend using Gonstead versus Thompson drop versus diversified, what type of class lasers do you have. Those kinds of questions are important for this tax study, and that's where we come in and are able to help our DCs get these, because we know the questions to ask, we know the qualifying activities that you have, and we know the legalities behind how to get those for you. Why does it sound too good to be true? Honestly, if it sounded bad, we probably wouldn't mention it to you. Just because we know about something doesn't make it untrue. Remember, these programs are congressionally mandated. You can look up the Section 41 tax laws and see that they're there. These are real tax laws that DCs unfortunately just don't take advantage of. Again, when you go to getcovidaid.com, if this is part of what you want, this free tax study, select the tax rebates piece there, and we will do that study with you. We'll get you on our calendar after you get your documents uploaded. You'll have to upload your 3 years of tax documents, personal and corporate. But once you get those uploaded, we will be able to go from there, get you on our calendar, and tell you how much you owe or how much you can get back. There's 3 ways to schedule, but we are getting flooded right now. We've actually hired new staff to help out with some of this free stuff that we're offering, and while our CPAs maintain help with the SBA assistance. So the 3 ways here are: you can text tax credit to 555-888. That is my personal calendar for the tax rebate qualifications. But if you can, please use getcovidaid.com so it's dispersed appropriately, and it gets to the right person, and we know exactly what help you're getting, and you're in our CRM, and we can make sure we're tracking with you just to make sure you get everything that you need. Also, you can call our office at 704-490-4111. We may be a little backed up. You may have to leave a voicemail just because of the amount of calls we're receiving during this, but our lines are open. The best way to get in touch with us is getcovidaid.com. And so I urge you, that's where you should go if you want us to help. Again, everything that we've offered today, you can do by yourself. And if you can, do so. Only use us if you want our help. You have the links. You'll have this go back out to you, or where you can find the documents and things you need to do these yourself. So if that's something you can do, do it. If you want our help, we're here to help. We've hired people to help during this challenging time, and we're ready to go to work for you guys. Christy, was there any questions? I can take a few minutes and answer.
Oh, yes. Let's see. If you are looking at my tax returns filled by my current CPA and he doesn't know about these tax credits, how will you be able to see them?
How will I be able to what?
I think what he's saying is if basically their CPA didn't utilize these tax credits and you're looking at their taxes, how are you going to know to utilize, to go after these tax credits?
Sure. So that meeting that you have with me is going to be a 30-minute tax credit study meeting, where I'm going to go through an intense study with you, where I'll learn about all your techniques, your equipment, your modalities, your staff, everything you do that could qualify for a tax credit as far as you are as a DC practice or a medical practice, depending on who's on the call here. But we will look at everything that you do in your practice, and then I will use that plus your tax returns and the amount of time you do during these. We have a piece of software you use that qualifies you for a certain amount of time based on what you qualify for in your activities, and be able to determine what percentage of your 3 years of business and personal tax we can get back as a credit. It's a lot of work. We'll do 1 free year for you in the tax credit study, but we'll be able to show you which credits you qualified for, how much time you qualified for, and the other doctors on your staff qualified for, and how much is there for each year if you want us to go back and get it for you.
Okay. Is this tax rebate coming back to the practice or the individual chiropractor?
Individual chiropractors, coming back to you personally. You'll actually receive a check in the mail from the IRS, which is a lot nicer than sending a check in the mail to the IRS.
Is the 30,000 baseline just for personal income tax, or does it include payroll taxes for staff and myself on my corporate return?
Personal income tax, federal returns.
Do you have to pay taxes on the credit?
You do not. Let me give an asterisk to that. In California, for the state credits, the way they have that set up is an incentive. So for the majority of these, you're not going to have to pay for. The only one you would have to pay taxes on is in California, not the federal, but the one they do from 2015 for state. The incentive is California paying you to continue having your practice in California, and then California taxes you on what they paid you to continue working there. So that's the only piece that would be taxed.
So I'm assuming there's no help here on the tax credit if I received a refund the last 2 years, correct?
Yeah. So imagine if we had went through those years and I qualified you for $5,000 in credit. You can only get that credit if you owed that in taxes. It's like a child tax credit. If you don't owe anything in taxes, it's not going to reduce that, and you wouldn't have been able to take advantage of it. So even if we amend your returns to show that you qualify, there wouldn't be any check coming back to you because it wouldn't have been owed to you during IRS filing time of that year anyway.
Is this 30,000 per year or over the 3-year period?
So per year. And if you qualify for just 1 year, so let's say in 2016 you had a really good year, we can do just 2016. If you had a really good year in 2017 or 2018, we can utilize those too. And if you're unsure, guys, if you're on that cusp, if you've got a good bit of employees, you've had some up and down years, still it's free. We'll tell you if there's something there or not for free.
Okay, let's see. Do you work in all 50 states?
We do. Yep. Believe it or not, we're actually going to Alaska this year, as long as travel opens back up. So yeah, we're everywhere.
Let's see. Can you carry the credit forward?
Yes. So our office is not doing that at the time. What we're doing is the 2016, 17, and 18. If you've already filed 2019, we will reconnect with you on October 16th and get your 2019s. If we do the tax credit study and then you do qualify and you're doing the same kind of activities, if you have a CPA who knows how to do those, then you can apply it going forward. If you're part of the group that decides to use us as your CPA, then that's different, but that's not what we're talking about today. We're talking about relief. So for us, we're just doing 16, 17, and 18. Then October, we're going back to get 19s. But these are applicable proactively as well if you have someone to do it.
If I owe taxes to the tune of $100,000, will this help?
Oh my goodness, yes. Chances are if you owe taxes of about $100,000 a year, you have some significant credit coming back your way. I would give examples, but I don't want to get hopes down or up. But, again, we see between $14,000 and $100,000 in credit. That doctor from Virginia that had $98,000 paid about that much in taxes as well.
I have a whole bunch of questions about how much do you charge. I was gonna let you email them, but there's too many. So
that's okay. That's okay. So again, the tax credit study is free. So you do not have to engage with me to go get these for you if you do not want to. And I want to make sure that's out here. This isn't a sales pitch. I can give you that information and you can take that to whoever you want to take that to get these done. You do not have to engage with us. We're doing this piece of it for free and letting you know that there's monies there. If you do want to use us to do the tax credit study, our fee is 1/3 of what you get back. So there's not a flat fee or anything like that. We find out how much is there for all 3 years of you, and then we want a percentage of that. Part of that would be due once we do the amendments. The lion's share would be due once you get your tax credits back in hand, and then you use that money you got to pay off, to pay the rest of your fee. And again, this is kind of hidden treasure money for most people. They didn't even know they qualified. They didn't know they got it. And the reason that fee is there is because it takes a tax attorney, a team of CPAs, and an egregious amount of time for completing the tax credit study to complete these. So yeah, that's our fee. I appreciate the question. But again, we'll do the study with you for free. So I hope you take advantage of that.
Let's see. Will this flag me for future IRS or state audits?
Yep, great question. So again, as a fiduciary, I can never tell you that doing an amendment has no risk. That being said, we've done 5,400 of these, and we've never had a client flagged for an audit. And the reason for that is because we are very intentional about staying within the bounds. We've done enough of these that we know specifically what is legal, ethical, and appropriate, and what qualifies and doesn't. So, we've really got these down to know how to avoid the majority of risk out there at all. The numbers kind of speak for themselves, but yeah, thank you for the question.
How are these credits different from write-offs that include cost of R&D, supplies, travel, marketing, etc.?
Yeah, great question. So these are separate in that you're not getting an ADA credit or something like that. You're not writing off an expense that lowers your AGI. These are credits for creative, innovative, and unique research and development activities within your practice. These are specifically around the amount of time you spend doing certain activities. So, for example, if you go to a CE course in Florida, you spend 3 days there learning about some new techniques. You take those back and you experiment in your office with those techniques for the next 6 months, learning to add those to your care plans effectively, trying those with different patients. All of that time counts as a research and development activity, and a percentage of that time that you utilize it and any other doctors on your staff are utilizing that will count towards credit. So these are a little bit different than just buying something and then taking that off. You don't have to buy anything to get these. This is about your work as a doctor.
Okay. Do you defend audits if we're audited after submitting tax?
If we recommend it, yep. If we recommend it, we defend it.
Great.
You have free reign to our tax attorney. He loves it when I use that phrase.
Does going to digital X-ray qualify?
If you had to research which digital X-ray device to get and spent some time learning with that to streamline activities in your practice, then yes.
Let's see. Are Fed taxes separate from self-employment tax?
So self-employment taxes, you just don't get you don't pay yourself a W-2. You're just a 1099 employee. And so you just file straight to federal. So you wouldn't have to worry about corporate taxes. You would just send us your personal taxes. And that's what we would base the qualification off of.
Well, I know, Nick, you have to go join the California webinar.
Yeah.
So I'm going to wrap this up. I know that there are, trust me when I say hundreds of questions that we have not gotten to, but just so y'all know, I've been documenting these and sending them to Nick so that we are going to follow up with you and make sure that your questions get answered. I do encourage you to go to getcovidaid.com if you are interested in finding, getting help on your SBA loan, or you're interested in doing, learning more about tax credits or tax rebates, and working with them. If you, for those of you, because there's like 100 of y'all asking, when will we be able to get the recording? In about 30 to 45 minutes, the recording will be posted and you will all receive an email to the recording. If you're watching the recording and think of a question and type it in the comments box, it emails Nick. So just remember that there were 1,500 of you. There's only one of me and one of him. So it's going to take a few minutes for us to respond back to all of this stuff. And so please be patient with us. Also, somebody said that they tried the website. So I don't know which one you tried. It could be that it got overloaded. because too many people were accessing it at one time. If it's the SBA website, it is under maintenance, probably because so many people are hitting it. So keep checking back.
Yeah, if you're using the SBA website, if you're doing it by yourself, wait till 7 p.m. If you're going to our website, Get COVID Aid, after you enter your information, if it's giving you an error, just know that your information got to us, and we'll be able to reach out to you. If you're trying to schedule, then you have to submit all your taxes before it gives you the schedule link.
Okay. Well, excellent. So like I said, I've copied everybody's information so that in every question. So if y'all have any additional questions that you think of after today's webinar, email Christy at ChiroHealthUSA, and I will make sure I share that information with Nick and Don to follow up with you and their amazing team, because they are truly amazing. Oh, can we get answers back to all the questions, not just ones we asked for individually? How about I'll put them in a spreadsheet for you, Nick, and then you can answer them, and I'll send them out to everybody as a handout.
Yeah, we'll just make a FAQ.
Perfect. See, thank you, Aaron. That was an excellent suggestion. I just added that to the list. All right, guys. Y'all have an amazing rest of your day. Oh, wait, I was supposed to tell y'all something else. Nick, you can go ahead. I know you have to leave.
All right. Thanks, everyone. Y'all have a great day. Be safe.
Guys, I just wanted to remind y'all, put my screen. And thank y'all for bearing with us while all this crazy stuff is going on. But just a reminder, we have 2 more webinars this week addressing a lot of your questions regarding COVID-19. So we had today's SBA Disaster Relief. Again, that recording will go out in the next less than an hour. Tomorrow, we're having the strategy for COVID-19 response, is developing a strategy for your practice. We'll be addressing everything, even telehealth services. And then we're going to be answering questions on Friday, what employers need to know about the Families First Coronavirus Response Act. So make sure, again, that you register for those. Do not worry about limits and not being able to get into the webinar, because our software obviously allows for, there is no limit to the number of people who can get on here. Just be aware that we're doing the best that we can to answer as many questions as possible, but we may not be able to get to everybody. So again, be patient. We're working out different ways to be able to assist y'all and answer all the questions that we possibly can for everybody. So I will follow up with the guys because they have so many webinars today, but we'll make sure that we get your questions answered. And I'll email you all directly from me with the FAQ for those of you. So for the FAQ and all the questions that we're answering, that'll be sent to you directly from my email. For everybody who's listening to the recording, if you type in a question during the recording, it's being emailed directly to Nick. So thank y'all all so much. Y'all have an amazing rest of your day, and we will see y'all later. Bye, everyone.